Welcome to LifeBlood. This is George G, and the time is right. Welcome to today's guest, strong and powerful Bobby Matson. Bobby, are you ready to do this?
Ready to go.
All right, let's go. Bobby is the founder and CEO of PayItOff. They're a venture-backed team automating every aspect of debt management. They're doing it for fintechs and workplace providers. Bobby, excited to have you on. Tell us a little bit about your personal life, some more about your work, and why you do what you do.
Yeah, so my personal life, I'm a drummer, a father. I'm very focused on company building. This is my second company. Actually, the first company I built was in the music tech space about 10 years ago. Focused a lot of my career on working at companies like Fandango, Groupon, Stitch Fix, as a tech lead or engineer, software engineer. And so got exposed to the student loan and debt problem in general, because my wife and I had six-figure student loans that kept us from starting a family. And that, had a lot of credit card debt to navigate as well. And this really kept us from achieving a lot of the financial goals that we had. It's just such a complex debt. And it's very different than other types of fixed payment loans. So I got really kind of frustrated by the fact that I had worked at all these apps, helping scale infrastructure to millions of users, helping users make complex decisions with software and have it be a simple process. And there wasn't anything like this for debt. There wasn't any pathfinding algorithms being used. There wasn't any, simple way to get an A/B contextual to me as a user. So I just started working on that, built a little engine for my wife and I, codified all the regulations in the space, what our options were as borrowers, and that led us to saving tens of thousands of dollars. Now we have a 3.5-year-old, we have a house now, like all the things I never thought were possible. So, realized that we weren't the only ones dealing with that problem. About 4.5 years ago, went full-time into PayItOff. Today, we, like you mentioned, automate every aspect of debt management for financial apps. So we do everything from syncing your loan accounts to automating guidance and enabling action on the guidance, like making extra payments or refinancing or enrolling in federal programs that save borrowers money. So that's what we're doing today. About 20 folks in the team now, and we've been growing like a weed. So it's been an exciting time.
Nice. Well, certainly congratulations. And I always appreciate when people have a problem and then they start a whole company to solve that problem. And, then through that, solve all kinds of different problems as well. So how's the drumming going with the 3.5-year-old, Bobby?
Oh, yeah. It's interesting. It's, I do have for the first time, because we've had the house almost 2 years now, have like an area for my drum set that doesn't disturb a whole apartment building. So it's been nice to have a little man cave. And so that's been great. She actually loves it. She pops in when I'm drumming sometimes, and I have to get her headphones because I don't want to mess up her ears. But she likes to play, so that'll maybe we get her a little kit soon.
Love it. I think that's awesome. All right, so I'm sure there's a million different use cases. Walk us through some of the most common, some of the where you've seen a lot of success.
Yeah, we've seen a lot of success in a lot of workplace opportunities. So student loan benefits, we power a bunch of student loan benefits platforms. We, power basically any financial app that is working with employers who wants a student debt module or wants to offer student loan benefits. What we do is we facilitate the verification of those loans and facilitating the contributions from the employer. So making the payments to the servicer. You can think of us as the connective tissue between any application and the servicing layer for student loan land. So that's where we saw a lot of success early on, was being the rails for the workplace benefit providers that want to be able to offer student loan benefits to their employers. And so that's a use case that we see commonly. Another one we see very commonly is more direct to consumer financial apps. We're essentially the student debt button that can help them, enable auto pay from their student loan accounts, enroll in federal programs, saving them $240 a month. That was one of our first use cases, was the federal programs, because they're so important. Half of borrowers benefit financially from them, so you really can't ignore it if you're in the space. And so, yeah, that was really a lot of our early use cases. The goal, though, is really clarity. Borrowers, even in student loans, focusing on those use cases for a second, 15 million student loan borrowers changed servicers in the past year. So you're talking about almost half of all student loan borrowers having a different servicer. And that's a lot of change. And borrowers really need clarity in like their best next step. And so that's what we really step in and help do. We help basically automate that best next step. So any app using us doesn't need to know a thing about debt repayment, doesn't need to know a thing about student debt in order to have a meaningful outcome for the user and for the business.
And that is because you and your team, the software, understand everything about set student loan program. And so you just need the borrower to enter in their information. And then based on that, you'll be able to say, here are the different ways and options you have for paying off your loan.
Right. And even beyond that, we can show the options that are based on their situation. Say that the process is usually I link my servicer accounts, I give permission to access that data, and then we ask maybe a question or two, and then you get guidance on, are you eligible for a federal program? What loans should I refinance? So the questions that I really had trouble answering for my wife and I back then, it's the same kind of things. No one was saying, should we refi? Is it dangerous to refi? Can I see the cost comparison relative to my repayment? Those are still difficult questions until we came to market and just focused on solving those. So yeah, we basically are really, really focused on the guidance piece. That's where I think, the most need is, because that activates the borrower to do something that benefits them financially. And that activation is powerful for the businesses too. It means they can set up auto pay from their XYZ bank account. It means they can make that extra payment in your app under your brand. They don't have to call their servicer again. They're able to do everything with a couple button clicks, and that's extremely powerful.
Yeah, there's no doubt about that. That's super powerful. I'm just sort of thinking through my family's personal experience, and probably not dissimilar from what you described with student loans. And I think that, just being honest, it felt like there's really not that many good options out there. And I probably could have dug deeper into it, but we just didn't. So just knowing definitively, these are your choices. And then, okay, great. Now that I have the information, I can make a decision and really get started moving towards beneficial, consistent behavior.
Right. And the truth is, it would take a lot of effort to get those answers, right? Everything's fragmented for a borrower. They maybe have a credit card over here, they have a personal loan over here, maybe they're delinquent on an auto loan that they didn't even know because they never got the paperwork or something all the things they need clarity on. It's really as simple as having access to that data in a central place. And I think instead of having to track all this in spreadsheets or manually through Mint or YNAB or whatever, you can just source the data, have it be a live feed that you manage. And I think those are things that honestly empower a borrower to make the best decisions and, have actual control over it, where you will recommend, hey, look at refinancing these 3 loans based on a heuristic. This is, going to be a good outcome for you. And here's the loans you shouldn't refinance. But if they want to refi all of them, and that's their decision. No one should stop them from doing that. They can toggle the other option and refi all versus some. So it's about giving what the math says, what the simulations we run say, and then allowing them the agency to make whatever call is best for them.
Amazing. So the user experience is I can plug in all of my debts and it will give me suggestions, guidance, clarity on different paths to take. It's like a choose your own adventure book.
Yeah, I like that. Yeah, that's a good way of putting it. We have most of our use cases have been in student loans. Over the summer, we have a liabilities beta we're really excited about. We'll be a lot more public at Money 2020 about what that looks like. But we've got a lot of exciting things in the works for basically any debt vertical. We have a very strong list of coverage that we'll be announcing soon. So yeah, definitely exciting things there coming down the pipe.
Nice. And so How many different companies are there? You mentioned student loan benefit platforms, but about 10 years ago, there were none, and now there's probably lots.
Yeah, and so just talking about that industry for a second, there's a Secure Act 2.0 that is passed the House, bipartisan, and we're expecting this year, we'll see, knock on wood, actually seeing it go through the Senate floor. What's exciting about that is that treats student loan contributions very similar to a 401k contribution, according to the IRS. So I think that would open up this industry as a core benefit now, instead of a fringe benefit, which it's still classified as. So that's a big tailwind for the industry. And so now we're talking about, not just powering student loan platforms or maybe tuition assistance and 529 providers who want to offer the benefit. Now it's just a core benefit that goes into any 401k platform, any payroll platform. I think we're going to see an evolution with this regulation that we haven't seen before in a long time for benefits.
Yeah, I think it's super exciting, and the potential of it is. I think it makes all the sense in the world. I think that the more data you can provide somebody in a way that's easy to understand will then, to everything you've been talking about, really empower them to be able to start making good, beneficial decisions. So I'm sure that the government will act appropriately and make a good decision, but we'll just have to wait and see on that one. So
yeah, definitely.
Nice. And do you have a sense of how reducing the amount of time or interest that it takes if you are optimizing debt repayment or student loan repayment?
Yeah, so it's interesting. What I mentioned before, half of borrowers benefit from federal programs, which actually are programs where most of your payments are pegged to your income. So those programs allow for you to pay based on your income. There's subsidies the government pays for, and then there's a forgiveness event after a set term. So most borrowers, benefit from these types of plans in the long run too. Instead of like there's like 14 federal programs, right? There will be a 15th that's coming out in the next year or two. So there's all these different programs that people qualify for based on their situation. So that's where we've been an expert in for many years, how to surface the plan for the borrower and help them enroll in it digitally. The side that you're saying is around 31% benefit from prepayment that maybe weren't prepaying before. So those are scenarios where, you're contributing $100 a month and you're paying down your loans 4 or 5 years faster. Those, especially in the private market, if you don't qualify for a refi, those are the best decisions for you. So these are the types of things that you'd see using our system as a partner app using us, you wouldn't have to know any of the things I just described to get the outcome, to say, oh, now we have a recommended prepayment amount. One thing we commonly hear is, how much should I prepay? So we run that simulation based on, we'll add $1, add $2, add $3, and do all the math around the best, sort of bounds for the borrower. So those are the types of things where the outcomes are based on, tailored to that borrower. But it's years off in prepayment. It's usually 4 to 5 years off of your original term. And if you add a refi to that, it's even faster.
Nice. That's super exciting. Love it. So how are you partnering with apps, companies, providers?
Yeah, so what we do is we are an embedded solution. So we live within the app under their brand. We have pre-built UI that they can just snap into their existing experience and be able to drive those outcomes. Typically, there's some incentive to, say, perform an action, like signing up for an account with a neobank or some value creation event that we focus on. Other times it's about engagement and just being the center of that borrower's attention. That is the outcome. So there's a lot of ways that we're helping apps be stickier because we are a B2B company. We are similar to a Plaid in the ecosystem. We're more of the financial data layer. But much more than that, we're also the decision layer and then the action on that decision. So I think that's where we're seeing the environment go is, instead of just sourcing data with Plaid or other, aggregators, and that being a cost center to you, there's some ROI working with a PayItOff or similar provider who's going into the insights and action portion of the industry.
Got it. And is there a reason that somebody that has an app or is providing this type of service wouldn't reach out to you?
Not that I can think of, unless they're just not focused on debt at all. Because I think if you look at use cases outside of student loans, we touched on a lot of the student loan ones that we've been in market with for a long time, but we're uncovering all sorts now with these other debt verticals, balance transfers, like digitizing that process instead of mailing, traditional banks are mailing checks to spending millions a year, millions a month, sending checks in the mail. So digitizing that, you can better track conversion, you get better engagement. So these are the types of proof points our use cases that we're seeing a lot more of is just better automation in places where it's very manual still. We've seen it with refinancing, like automating payoffs, verifying the loan account, helping the lender get the refi done and not have to call the servicer or anything. These are all things that are we've done in student loans to some degree, and we're expanding into other debt verticals. And that's just like tip of the iceberg. We can talk about, if the best next step is consolidating 3 credit cards into one to save on it, or consolidating to a personal loan and lock in a fixed rate while interest rates are rising. There's so many use cases that can be derived from, what our tools do.
Yeah. Everything you just said makes all the sense in the world to me. So how do y'all make money?
So we make money on usage. Sometimes we'll align on a value creation event like a refi and split that kind of thing. Depends on the use case, but typically we'll charge for usage like a Plaid. Like we innovate on the tech more than the business model. We're an API provider. We do have a lot of pre-built low code and no code modules that we offer, but we're focused on driving the ROI, and the business case is always built on that ROI. So we're really aligned with the partner on that. And we won't do anything that doesn't benefit the borrower financially. That's the key. That's what I think a lot of folks in the space miss, especially the Plaids of the world, is that if you focus on the financial health of that end user improving, it unlocks tons within the value chain. The partner benefits, obviously, the borrower benefits, definitely. We're in the middle with the partner and sharing that value. And then the servicer has more borrowers in repayment without driving additional cost. So you're looking at, a win across every aspect. So yeah, that's kind of the way we think about our place in the industry.
I love it. Makes total sense. If you had said the opposite, obviously we probably wouldn't be having a conversation because you wouldn't have a successful company. So I think that's great, man. I think I'm super excited to see more and more people get this in their hands and to start, creating more beneficial habits. So I love it. Bobby, the people are ready for that difference-making tip. What do you have for them?
Yeah, so there's a couple things. I think the first one that comes to mind is, there's a quote that always sticks out to me. It was early in my entrepreneurial journey that I heard this, but I got to meet this person named Richard Ward, who used to be the CEO of Lloyd's of London. And he told me, I asked him for his thoughts on company building. And he said, well, there's 2 things. The first is treat investor money like your money, which I still to this day do. And the big one, though, is don't take a risk you don't understand. That one really stuck with me because, the reality is people take lots of risks all the time. If you might be more risk tolerant than others. Sometimes it's riskier to have a full-time job. Like for me, I felt that way. I was growing out of my sort of engineering role, and where I saw myself going was, hey, it's riskier to have a full-time job. Like I have more upward mobility here if I just build from scratch the team. And, I do think I understood that risk really well, and I understood the problem really well. And, if you're looking to maybe start something or go into expand your career possibilities, those types of things, like you just got, as long as you understand the risk, you're better suited to execute it.
Well, I think that is great stuff. That definitely gets, come on, Bobby, thank you so much for coming on. Where can people learn more about you? How can people get in touch with you and pay it off?
Yeah, so the best way is to just go to payitoff.io. If you're a borrower, we have a list of a lot of example partners. So if you're looking to use apps that leverage our technology, definitely go check them out. A couple notable names are Scally, Candidly, Chipper, Origin, a few other names like that. I think the other way, if you're anyone who's a product leader at any sort of financial app, financial tech company, even financial institutions, we're working with a lot now, more so than we were a couple years ago, then just ping us and we'll talk to you about our tools and how they can help your business. And yeah, we're here to help in student debt and beyond.
Love it. Well, if you enjoyed this as much as I did, show Bobby your appreciation and share today's show with a friend who also appreciates good ideas. Go to payitoff.io and check out everything that they're working on and keep an eye on everything that's coming out in the future as well. Super excited to track your progress, and congratulations on everything, man.
Thank you so much. Appreciate it.
Yeah, thank you again. And until next time, keep fighting the good fight. We are all in this together.